Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, Mr. AJ. Apologies for the delayed start today. We're working through some things. But AJ, good morning. How was your Thanksgiving? Welcome back.
Thank you. Everything's fine. Everything's fantastic, and we're ready to go.
Awesome. I feel like the storyline today essentially is we're continuing to creep up to these highs. I feel like I keep hearing that the volume is a little bit lower. And today it seemed like everyone was waiting to get a sense of the employment situation, which seems to be positive, and things continue to roll. What are you seeing? How are you reacting? What are your thoughts?
Hey, let's jump right into the employment numbers, right? Because there's always been this kind of thing over our heads, which is what is the Fed going to do next? There's been some uncertainty in the last couple of weeks ever since, that the people of the United States made that decision that they wanted to have Donald Trump back in the presidency. So that's caused a lot of interesting things happening in the market, basically based on, different sentiments jumping in. Well, looking at the employment numbers, which leads to the story of what the Fed's going to do, employment numbers got back on track, right? If we take a look over here, non-farm payrolls, they grew by 227,000. That's a little bit more than it was expected. And also last month, which was October, that number was revised up from 12,000 to 36,000. Now, October had some interesting things going on, right? We had that hurricane. We had a couple of different things that caused the jobs to go stale. Well, we recovered with a vengeance this month. 2 hurricanes in a row, I should say. Unemployment rate, however, this is the other story. So remember, when this employment situation comes out, it comes out with 2 different data points. They go to the employers for this number, the non-farm payrolls numbers, and the private payroll numbers, and the manufacturing payroll numbers. But then they go to the households for the unemployment rate. So this is kind of the best of both scenarios. This is where jobs are being created and they're getting, back on track after a month of pullbacks. But at the same time, unemployment's going up. And so that kind of solidified, if we jump over to the CME FedWatch that we like to check in with weekly, this number is around 88. It was up at 90% this morning. This number is around 10%. It's up back at 11%. Yesterday, one day ago, this number was at 70%, right? So these are employment numbers that people wanted to hear, that the Fed wanted to hear in order to make it okay for them to drop that rate. This 90% number, SIP, is, the probability that the Fed's going to drop by another quarter point next week.
And
is it next week?
That's a good question. And that's because essentially the economy, or consumers investing in the market, we're not getting, I guess it's a play of inflation versus employment, and they both seem to be kind of tamed. So the Fed is comfortable dropping and kind of staying with their expectations,
their initial plan. Right. So, the Fed over the summer hit kind of what they thought was the stasis point, right? And I've been talking about this a lot. This is actually a good thing, although I have to say that with all this hype around President-elect Trump, prior President Trump getting reelected, that's kind of thrown a wrench into the works. But what was happening is around the summer, we hit this stasis point where the Fed was saying, hey, inflation is under control. We've got to go back from being huge hawks on inflation to actually balancing our dual mandate of keeping Americans employed and keeping inflation under control. That's actually where folks would like the Fed to be making these minor tweaks to keep those two things in balance. And so, that was kind of the plan, was that the Fed had reached this point that now they're going to do tweaks on their overnight interest rate. They're going to do tweaks on their quantitative tightening. They're going to do tweaks on their rhetoric. Those are the three tools they use in order to, control monetary policy. They're going to do those tweaks just to keep that balancing going instead of just, all in on one particular strategy. And so that's where they've been. And we were wondering, there's a lot of rhetoric around the fiscal policy that's coming up in January. Fiscal policy is the policy around spending, right? That's the stuff that, the governments bring in versus the Federal Reserve Bank brings in. Federal Reserve controls monetary policy. The governments control fiscal policy. So, the fiscal policy is going to get turned up on its end, we think, right? There's been a lot of rhetoric and talk about that. And so that kind of, they play together, spending policy and monetary policy. So, that threw a wrench in the works because it caused, hirers, businesses to hire differently. It caused, investors to invest differently. But it looks like the Fed, based on these employment numbers, I mean, we don't know really what they're going to do, but this sentiment hasn't been too far off over the last, years of since it's been created, this target rate possibility sentiment. And so with it saying 88% chance that the Fed is going to drop rates another quarter point in 2 weeks, well, then that's what it's going to be, I think.
Yeah, it's like positive news all around. But I do see a lot of rhetoric and chatter about overvaluation, and I found a interesting chart that I'd love to get like your feedback on because it caught my attention. So to the left is 2024 compared to 1929, where it saw such a extreme run up and then the crash. And so the tweet here is crash alert. And should consumers be alert? I mean, when we look at your breakdown of the chart, I think what's great about your program and what you're teaching people is how to protect yourself in case we do come back down like that. But I feel like something drastic would have to happen in the world to see a 1929 pullback like that. But am I wrong in kind of the data that I'm seeing?
Well, no, you're not wrong, except the big difference is in 1929, a lot of the guardrails were pulled. And, there's talk of removing guardrails, in the next 4 years. But right now, those guardrails are all in place. Where they weren't in place in 1929. What we're seeing, so what you're bringing up is something called a oscillator or an overbought, oversold, or more generically, a leading indicator. The leading indicators are all off the charts saying that the market is completely oversold. I mean, overbought. That means that, the money is coming out of the woodwork being invested in the markets. It's really a psychology experiment. I was talking to somebody that I hope to have a guest on our show about the psychology of what's going on in the markets. And, FOMO is in, full effect here, whether it's the fear of missing out on Bitcoin or the fear of missing out on, the tech stocks. There's FOMO out of control. We're seeing money getting pulled not only out of savings, but we're also seeing money being borrowed to be invested, which is starting to get a little bit sketchy. But, you know, the market is demonstrating what we call an ideal uptrend. The only, misgivings behind this ideal uptrend is where is all that extra money coming from? Because it's not money that's been floating in the markets going between different bonds and equities. It's new money. And that new money usually is money that's not as intelligent as the existing money in the market. So that's kind of worrisome because new money typically comes in and goes out just as quick.
And then I did have another chart or another tweet stat that caught my attention. That's kind of similar on the same storyline. Is U.S. stock market cap hit 60 trillion, almost double that of all Asian and European stock markets combined. And so it makes me think that either the U.S. is doing so much better than the rest of the world, or there is a little bit of that, like you said, FOMO, right? Because who's driving the market up? Is it continuing to be these high flying names like we've discussed in the past, like an Nvidia or an Amazon that can lead the indexes higher? Just real quick on the U.S. versus Asia and Europe, like market caps, like have you ever seen something like that or have we always been more valuable than the other nation or continents?
We absolutely have been. And it's funny because I constantly am getting messages about how, hey, AJ, you're forgetting that so many countries are moving away from the US dollar. I guess so. But if you look at the actual statistics, the countries that are moving away from the US dollar don't have any GDP to begin with. If you take a look at, how many countries in the world do business in the US dollar, it's like 85-90% of the business is done in the US dollar. The US market, as of right now, is the market to be in. Every country knows that. And if they're not partaking in the US market, it's kind of, whatever it might be, right? But the US dollar reigns strong, and it always has. It's the most mature. It's the oldest market. I mean, that's where free market happens, is here in the States.
And one final question, because I'm looking over at the notes, and it looks like commodities are steady, oil steady, gold is steady, Bitcoin is steady, but it did hit that 100,000 mark. What were your thoughts when you saw that?
I mean, it's a what we call a psychological level of resistance. Again, I don't know where the money's coming in from in order to fund that, especially right now. This is an interesting, I've been looking. Do you guys do you remember, Sip? We used to look at this chart pretty often. This is the Bureau of Economic Analysis. This is all free data that you can find online, where you compare incomes to savings and things like that. So, this is the income graph. This is showing the income every month since 2023 January. So you can see this is a good sign for what's happening is the incomes continue to grow. And then you of course, something that might be changing in the next couple of months or over the next year, 2025, 2026, is taxes. So you can see taxes are pretty consistent across the board here. And if we subtract taxes from income, you get what's called disposable income. So let's just look at disposable income. We'll get rid of taxes. So disposable income still on the rise. I mean, October, we had a huge jump in disposable income. But now let's look at expenses, right? This is outlays. So outlays have been on the rise too. This is the whole discussion around inflation, right? Basically, the Fed would like to see this kind of flatten out a little bit, not go up as aggressively as it is. Both the blue line, what people are getting paid, and the orange line, what people are paying for stuff. Now, the question is what's the difference between these two, because that's going to be a person's savings, right? That's going to be this number down here. So let's just look at savings. All right. So now when you just focus on savings, you'll see this interesting trend. Now, October, we had a pop up, but you'll see kind of why people, especially in this year, 2024, have been saying, hey, every month I'm not taking home as much, I'm not able to pocket as much money. And then in October, we got a pop up. But, the lead up in December is that, hey, things are more expensive in the store, way more expensive than the amount my paycheck has been growing. But there's also something else that we've been looking at here at Trading Trainer, and that is how much of this savings is being moved from passive accounts going into something like active trading accounts, right? How much is going from, just putting your money in a certificate of deposit, or even something as aggressive as a mutual fund. These are like hands-off investments, to going into things like crypto and stock trading and options trading. And the number is huge. And so there's a lot of folks, like I said, putting their money into the markets without, and this is just now we're getting what AJ's thoughts are. This is money that I'm not sure folks are doing their risk analysis on, right? They're not thinking that the markets can lose. So this is kind of a very vulnerable place for folks. But yeah, that's what we're seeing, Sip. We're seeing this run up in Bitcoin. But I think that, I'm friends with a bunch of crypto heads, and they're all saying, hey, crypto's going to go up by 2026 to 200, $250,000 a Bitcoin. I'm pretty sure that this 100,000 level, we're going to hang around there, just psychological resistance for a while. And we may even pull back because it just doesn't make sense.
I mean, a 50%, like going back to 50,000 would be, if you look long term, an okay pullback, but the world and the crypto heads would kind of go crazy
They'd
if
go
that
crazy.
happened. But if we looked at the history of Bitcoin, we've had those crashes before, and
it's a very volatile instrument, and I hope that the folks who are jumping in on that investment actually understand how volatile it is. It's not just a win-win. So this whole FOMO thing is maybe getting the best of some of our newbie traders. That's why they really need to get some sort of guidance, I think.
Yeah, and when we look at the chart, and it doesn't even, I don't think we need to even go into the analysis, because we're in this green zone and we're just hanging in this green zone until something changes. And at the rate that we're going here in December, we might stay in this green zone for the rest of the month.
Just one note. So I'm always looking at the broad market. Why am I always looking at the broad market before I look at individual symbols? Because there's this phenomena called correlation, right? Correlation is, if the market goes up, is my individual stock going to go up? And that correlation effect has gotten stronger and stronger through the years because of the proliferation of exchange traded funds, right? Now we're trading a basket of things rather than trading just individual stocks. So I've been looking at the broad market heavily over the last days, and one of my models is showing this instead of what I'm showing on the screen, and that is a faster ascending line of support versus the line of resistance. And that's like a lot of mumbo jumbo, but what it means is that we're consolidating, and a consolidation pattern from an uptrend like this, SIP, it usually results in a breakout down. Now, how big a breakout down, I don't know, but I'm watching that. And it's one of the reasons, if you guys who are part of the Trading Trainer program, or if you've just signed up for free access, you have access to this thing on our homepage down at the learning community called the Index Stats. Sorry, went too far. Here it is, Index Stats. you'll see that Trading Trainer has their in-house bias. And despite the current charts looking as sexy as they do for uptrend traders, we're not pumping it to bullish because there's so many chinks in this armor. It's like we're building this big skyscraper on sandstone, a foundation that can't hold that weight. So that's why you're not seeing us. We're still advising our in-house investors to keep a neutral in their bias.
Yeah, and I think from what we cover on the show often, the best way to play the neutral is with some of your option strategies where the time becomes the element that that gives you your return. And so it seems as if, at least even for the month of December, that the time is really starting to slow down, because even as I watch the markets on a day-to-day, it's like the move happens in the pre-market and then it just sits there through the end of the session, and then something happens. I saw an interesting stat where, they said that like 70% of the moves of the year were all done outside of normal hours. And
yeah,
that's rarer, and it kind of shows where we're going in this 24-hour market now, where it's just like the markets never end.
Can I show you something, Sip? Something that might be interesting to our viewers. So it's something that I've been looking at for 2 decades or more. It's called the open range, and this tells you a lot. It brings up, it totally makes me think about what you're talking about here. The open range is defined by the highs and lows every day of the first half hour. So, for instance, today it's being defined here. That's the low of the first half hour. These are 15-minute bars, and that's the high, right? And so you can kind of get the sentiment of the market, which is the masses, right? The pre-market is your big money traders, right? But the masses of traders that come in later during the normal business hours, you can get an idea of what that big giant tribe of traders is thinking by looking at price compared to the open range. So you can see today it's hanging out in the open range. That means it's not quite a bullish sentiment. Same thing with yesterday, right? If we look at the highs and lows of the first half hour, we call that, and it's a day trader's trick, by the way. People are saying, where did you get this? This is a trick that I learned from all the day traders I used to hang out with. So you can see we closed lower than the open range, and for most of the day we were oscillating before. Now on Wednesday, check this out. This shows you how powerful that open range was. The fact that the market was in the afternoon, and especially during the last hour of trading, which we call the professional hour, it was trading above the open range. Wednesday was a really bullish day, right? But today and yesterday, not so much. And so I want to give this tool to our viewers. Pay attention to the open range when you're looking to get into a trade, especially if you're an afternoon or professional hour trader like I am. Reference what the day has been compared to the open range. It's very, very insightful.
Awesome. Love that analysis. One more time, I'm going to give the link to your quick links. We've gone ahead and pasted that in the chat, but there's a few things that we reference on the show. Obviously, you get access to all of AJ's socials, the Trading Trainer social channels. You'll see one of the blue pink arrow indicators on AJ's chart. That's available in the free indicator suite. Feel free to show some love on the YouTube channel. Go ahead and hit that follow button, hit that subscribe button. We do appreciate it. And some other freebies. It looks like we just added that in there, so I'm not sure what all is in there at the moment. But knowing AJ, there's
white papers, access to that index stats tool, all of those little tools that we've created over the year. We've made those available to folks to just have.
And then just some more information on Trading Trainer as a whole, one-on-one coaching. So feel free to head on over to the link, dig into any of the stuff that interests you. We are streaming live, so and it looks like we've got some good viewers in today. So if you guys have a name that you want AJ to run through, feel free to throw it in the chat. Otherwise, we're going to take a quick break. And I've got a question for you, AJ, when we get back, and then we'll get into your pick of the week and the speed round. So sit tight, folks. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ. So some pretty shocking news this week. I don't know if you caught it, but the United Health CEO being assassinated outside of his hotel. There's a video. There's now a manhunt for this. Obviously, it's very tragic news, and it just kind of shows you the world that we live in now. But my question to you is, the stock rallied at the end of the day on that news, and I was very perplexed by that. And what are your thoughts on a CEO of a major S&P 500 company being murdered and then the stock going up in a day? Am I wrong to think that maybe there's something off there?
I mean, now you're getting into conspiracy theory type discussions, but you never know. Maybe people didn't like the way that he was managing the company and they're glad he's gone. Maybe it has nothing to do. More than likely, the stock price has nothing to do with what happened to this gentleman, and it has more to do with maybe some group changes in this particular insurance situation. One of the things we can watch is whether or not the price comes right back down in the next couple of days. But for the most part, I don't think they're related. And it's very sad news. It's kind of a testament to the fact that, the 12 most richest people in the United States right now, if you add up what they own, it's the same as what the lower 50% of the people in the United States. So income disparity is for real right now. And I think, the little guy is starting to get upset about that. And there's been all these discussions about insurance and how regulations on insurance may get pulled back. And so people are going to get denied. This person, we don't know, because isn't he still on the loose?
Yeah, that's what's crazy.
So, it wasn't one of these cases where he was taken out as soon as he took out this guy. It wasn't one of those cases where he got caught. We have no idea what the motive is. But, I wouldn't doubt that it's somebody who's super disgruntled by the insurance company. There's a lot of folks who are upset with insurance. I'll tell you what, I'm a little bit, so and I noticed on a different but maybe related topic was that Elon wasn't able to get his pay package from Tesla that he was looking for. This is the second time he's challenged it in court. He wanted, like, I don't know how much, but they're like, no, that's really a lot of money, and you are firing 22,000 employees, and yet you want this huge pay increase. No, Delaware is like holding firm that I read that many CEOs now want an increase in pay to pay for security based on what happened to this gentleman. But they're already it's just creating an even bigger, income disparity. I mean, the last time you had such a huge income disparity, it wasn't here in the States, but it was in France, and they had a revolution and a whole bunch of rich people got their heads cut off. So, you wonder if something like that is rolling around soon.
Yeah, it's a crazy story. Still out on the loose. I imagine other CEOs of other companies might have a more drastic of a pullback, like like Mark Zuckerberg at Facebook. He is the creator and leader of the empire. So it's just crazy to think that that was just all caught on tape. I mean, you've seen probably the video because it's all over the place, but it's like 6:30 in the morning. Wild. All right, cool. We'll move on to some positive news, which is looking at opportunities in the market that we could take advantage of using some of our amazing trading strategies, options, tools.
Let's do it.
So for the week, I think this is a very good name for us to dig into. Your pick of the week is Super Micro Computer, ticker symbol SMCI. What's the backstory with this company here?
So this is a company that just offers overall, corporate-based server solutions. They even delve a little bit into the AI world, but they'll handle a company's IT stuff, right, from start to finish, and in every direction. They're a total solution company. And what I am excited about is if I go back over the last, let's say, 4 earnings, and by the way, they just had a 10-to-1 split, so they brought their price of their stock down so that their loyal followers, and they do have a loyal following in the corporate world. They're a big B2B company, and their customers really like their solution. Now their customers, those companies, you'd be surprised, a lot of companies invest in other companies' stocks, one, to be on their boards, but also if the company is just a lucrative company. So they brought their share price down, making it possible for their loyal followers to, get involved in supporting the company, profit sharing with the company. Looking at the last 4 earnings, so I'm going to go back to, let's go back here. 1, 2, 3, 4. And then they had a call and they're reporting earnings after that. There is, gentle trending up and down, but for the most part, if you look at the day before and after earnings, the price usually stays somewhat at parity, and it's done it over and over, which tells me that I might want to be prepared for an earnings play next week. So they're releasing earnings on December 10th after the market close. So I'm looking at one of our calendar spreads, our horizontal spreads, in order to profit on the initial volatility rush, which is going to happen ahead of earnings, and then the volatility crush that happens the next day. So this is going to be a trade that doesn't even last 24 hours, but it's not in the same trading day. I'm going to buy the buy the calendar spread probably in the last hour of trading right before the earnings release. So that'll be on December 10. And then the next morning, I'm going to do a price assessment, and I may adjust this strategy in real time, depending on the price assessment, meaning what happens to price overnight. But my plan is in the morning, either during that first hour or maybe slightly after that, maybe at 10:45 Eastern time, getting rid of that calendar spread and just taking advantage of the volatility crush.
I mean, just looking at this chart, 120 all the way down to almost 10 in less than a year is quite a move, but looking like it's making its way back up. If you want to learn more about the volatility crush and rush plays, we do have a couple videos on our YouTube channel that can give you some other examples. So maybe next week, AJ will look back on this to see how it played out, because we've been seeing examples go both ways, where we're seeing really big returns and then really minor returns, but not so much as risky as just like some directional swing plays. So it seems like this may be one of the last earnings plays that we have for the rest of the year.
Absolutely. For those folks who are wanting to follow, I'm probably going to use either the February 21 or the March 21 as my back month option. and I'll probably be using either the December 13 or the December 20 as my front month option. So if you want to follow along, either paper trading or simulator trading, or if you have enough experience and you want to do some real, this is where my mind is at. And then this is actually a stock I might look at for premium selling after this whole earnings play is done. But yeah, Sip, let's report on it next week.
For sure. Awesome. So that's AJ's pick of the week, Super Micro Computers, ticker symbol SMCI. AJ, we did get a couple of live tickers. So before we go into our speed round, I figured let's run through these now and get some feedback. So Mike wants to know about PFE. I believe that's Pfizer, correct?
Yeah. Well, Pfizer looks to be forming a bottom here. There's been a lot of bashing of pharmaceuticals, so it makes sense that sentiment pushed this low, but it's a double bottom, right? We got ourselves a bottom, we got follow through, we got this fake sell signal, which was then followed by not selling follow through, but rather the opposite. We didn't get follow through, and at the end of the day, we were calling that another buy signal. So yeah, if I was interested in Pfizer now, one caveat: they are in the targets of, everybody's talking about how the pharmaceuticals have been getting too much, right? And now it's in the news. And I usually like to stay away from symbols that are, all of a sudden making headlines in the news. Those are not as easy to sell premium on. But the technicals are telling us that, if you didn't go long, a couple of weeks ago, you have a second opportunity to go long here and maybe buying Pfizer and, riding it up to anywhere from 28.5 to 30, and then possibly putting a collar on it instead of just selling it outright. I never think it's a bad idea to own at least a company like Pfizer for the long term. So instead of, just selling it outright when you get a sell signal, put one of our collars on it. That means sell some premium up here, use that premium to offset the price of some protective options down here, and then rest easy as that strategy keeps you secure until it starts rising again in price. So that's probably where I would go with Pfizer. But again, do your due diligence. It's called a soft data analysis. See what's happening in the news these days, because man, Pfizer definitely has been talked about as being one of those companies that's getting a little bit too fat off of, folks that need their product, not just want their product.
Yeah, and there's a lot of the pharmaceutical chatter in terms of some of that fiscal policy, like you talked about with drug prices and getting from Canada and stuff. So interesting to keep an eye on that. Another name that we've actually covered on the show a few times, Kraft Heinz, ticker symbol KFH, is it? KHC.
Yeah. No, here's another, and have you guys been noticing both with Pfizer and Kraft Heinz? You look at these earnings announcements, they make money. They're great companies, right? They're operated well. They are giving money back. You can see these dividends. So, if we look back at a year at Kraft Heinz, we're reaching somewhat near lows, but this company isn't going anywhere. Right? This company, not only do they own, Kraft mac and cheese, which I still think is in the top 10 of one of the most consumed products here in the States, but you go to the store and there's really like 3, maybe 4 companies that own most of what's going on in the store, and Kraft Heinz is one of them. You read the fine print on some of the labels of the food you're buying, and you'll realize it's one of the Kraft Heinz companies. This company's not going anywhere. So the fact that it's this low, you almost think that it's at a bargain. Again, soft data analysis. Make sure that this is, that there's nothing happening with Kraft Heinz in the news that I may have missed. But man, you look over here and you're getting an opportunity. We didn't get the follow through yet. On December 4th, we got an end of day signal. We really haven't gotten the follow through yet for this to be an actual confirmed sell signal versus the buy signal that we got on November 21st, and on the 22nd we got buying. In other words, I wouldn't be surprised if we see that this signal is canceled out. In other words, it gets labeled a false signal, and that we simply get a second opportunity to buy Kraft Heinz at a low. So again, check your soft data, make sure there's nothing that's going to be creating external stochastic shocks to this pricing, but otherwise take it as a godsend that you can pick up some of this Kraft Heinz stock or some deep in the money, far out in time call option substitutes, and then trade it up as it bounces off of this double bottom. I'm seeing a lot of double bottoms right now.
I'm actually surprised at how popular mac and cheese is. I don't know if you've ever seen some of those like social videos, but sometimes the like NFL teams will like ask the players a question of like, oh, what's your favorite Thanksgiving side dish? And I saw a couple, and the amount of answers of mac and cheese, I was like, since when is mac and cheese so popular at Thanksgiving?
It's
but
good,
I get
man.
it. I guess it is.
Oh my God, with breadcrumb. I like the fresh shit, like where you make the flour and water roux, and then you put in some provolone and maybe some good cheese like that, and then you put the breadcrumbs and you bake it. But the orange stuff, I mean, not knocking Kraft, because I just got through saying let's go long on Kraft, but that orange stuff that you get the powder out of the box and you mix, it's not appetizing to me. But maybe somebody called me bougie the other day because they saw my pickup truck, but then they got inside and they saw all the leather and all the fancy bells and whistles I got. And they're like, this isn't a pickup truck. This is a bougie. This is somebody who owns this is bougie. So I guess I'm bougie.
Maybe that's why I'm surprised, because I haven't had that version of the mac and cheese. I've had the not so appetizing,
the orange stuff. No, well, next time you come east, I'm a good cook. I'll bake you some real mac and cheese, and then you'll tell me.
To it. Maybe we'll stream it for everyone to see.
Hey, that would be cool.
AJ's cooking skills, because you're laying it out there like you got some skills, because I certainly don't. So I could do some camera work while you get busy. All right, cool. We've got 3 more names. It looks like just about enough time to run through them. So let's just, pound through some of these speed round names, starting with William in Flagstaff, Arizona, interested in InMode, ticker symbol INMD. I feel like we've recently talked about this one.
We sure have. This was one of my picks, and I hope you guys, when I looked back at when I featured this SIP, and if people, took advantage of when we featured it and we told people to buy the stock, they would have been buying the stock somewhere between 15 and 16 and a half. And now, even after, these two tops, it topped out about 1950. It's around $18, $18.20 now. And, if you missed your sell signals, and there were 2 sell signals here, if you missed the sell signal, even just doing the stock trade would have been, quite the winner. If you did one of our options trade, if you sold premium or you collared this thing, I mean, you are in the money. Now, would I say now is the opportunity to short this and do the opposite trade? If you're in the long version, I don't usually like to play both sides of the same ticker. It kind of overextends yourself. But if you miss the opportunity to go long when we said go long, well, here's your opportunity to go short. So what I'm saying here is you're either going to short some InMode, or maybe there's a substitute option. I'm going to pull up our options lookup tool, which has become so handy. I can't believe all the responses we get, SIP, about how handy this tool is. InMode, all strikes, show price components. If we wanted to find an option substitute, probably interested in the June or even January, we look to the put side. We look over here in this column for something less than 5%. and we look in this column for an okay bid-ask spread, I think that this $25 June put would be a fantastic option substitute for shorting the stock. So you would do that not only to get the leverage, because the stock is trading at $18 and this thing is only trading at $7. So not only do you get the leverage, but you also don't need a margin account if you're going to use the substitute. So, that's what I would do if you missed the first trade. If you didn't miss the first trade, if you're sending in this ticker because you did go long when we told you to go long, now's the time, if you haven't already, to sell your call premium and buy your protective put and make money on that time passing by. So very cool.
Yeah, I'm glad to see that it worked out from a couple weeks ago, because
of course
sometimes we don't follow up, but it's good to see it on the charts. All right, thank you for that, William.
Don't have any doubts.
I never do. I just we go through so many names, I forget which ones are the big winners, the medium winners, the little winners, the break evens.
No, this was
not
a big
too many
winner.
losers, but we do have some losers, and that's just part of the business. Okay, so Cheryl from Springfield, Illinois, wants to know, AJ, your thoughts on Lumen Technologies, ticker symbol LUMN, which I feel like we've also covered at some point.
I think we did. It looks like Lumen's hitting a bottom here. Lumen, they're not making money. They're hitting a bottom here. I haven't gotten the actual confirmation that a bottom is being hit. But there is a clear line of resistance at $6, or I should say support at $6 because it's from the bottom. I would wait for that signal. I'm looking at my fast MACD indicator that you can go get for free just by going to the quick links that SIP put up there. I would wait for my end of day signal and make sure that I got day of trading follow through. But I could see getting into some Lumen and trading this higher. I mean, if I go from $6, $6.50, $6.75 up to $8 in the underlying stock price, and I use a substitute option, I mean, we're talking about at least a 30% ROI on that trade. And if you decide not to sell, but instead to collar, let's pull that up in our options lookup tool. This is LUMN, and I'm not as interested in finding an option substitute. I'm just interested in looking at the increments. So if I were to want to buy some protection, maybe I'm thinking March for my protection. It's trading every dollar. So I just heard myself in the microphone. I say dollar, very dollar. $6, $7, $8. You could totally sell some good premium since it's going every dollar and make money on this thing. You don't actually have to just sell it. You could turn it into one of those ones where we let the clock give us the money. That's always a great idea. So Lumen, I'm in on. Let's wait for the signal.
I think it's your A's, AJ, right? Dollar. When I say dollar, emphasize the A.
Somebody was telling me that Americans are very nasally, and then I started to get self-conscious, and I listened to myself, and I'm like, "You ain't talking my nose."
I believe it. I think I sound like that, but that's the lingo that we've developed, and so it is what it is. But we have these fancy mics, so it comes out sounding crisper. At least that's the hope.
That's the hope.
Last name in the speed round, and I'm curious to know what's going on. Steven from Montreal, Quebec, wants to know the play on Schlumberger, ticker symbol SLB, popular oil gas name that delves into all sorts of things in that industry.
Yeah, we love. I've traded Schlumberger for, I think it appeared on my watch list in 2007, right? There was a huge run up around 2005, 2007 during the Bush presidency. He was big into pumping up energy companies. That was the beginning of the whole fracking movement, which now, if you guys don't know, the United States is the #1 producer of oil. That's because we went back to all these old oil wells that had dried up. We fracked the heck out of them, and now they're producing like there's no tomorrow. So, it's giving OPEC a run for their money. All to say, Schlumberger has been a big player in that whole thing, and they've been amazing symbol for premium trading. Let me show you. If I go back, like the last 10 years, each one of these bars represents a month. And so you can see that even over the last 10 years, we've traded basically sideways, which is great for premium traders. I'm going to come back to more recent. I'm going to look at a 6-month here. I love that Schlumberger is in this pattern that it has just found, where it's got $40 for support. It's got roughly $45 for resistance. I would look for, we're on this move down. Plus Schlumberger, you can see in their earnings, see in their dividend, they make money and they're doing well as a company. I would see if support holds around this $39, $40 range. In other words, I want to see it reverse and give me confirmation of a bottom reversal found. And if I get that signal, I wouldn't mind, going long on Schlumberger, either buying the stock in lots of 100 or buying substitute call options. And again, I'm gonna keep going back to my options lookup tool because it's so dang easy to use. But if I wanted to pick an option substitute, I'm going to do it right this minute. I would probably go out to, again, June, or they even have some August and September. But let's look at the June options. And we're talking about going long. So we want to look at the calls. I go down this column and I go over here. I actually like this one better. This is the Schlumberger. It's a little bit more than 5% extrinsic value, but the bid-ask spread tells me that there's a lot of trading on it. So I like the Schlumberger June 20th, 2025 $30 call as a substitute for buying the stock. And what's nice is the leverage, right? $42 is what the stock costs per share. This particular option is going for $12.80. It's going to move dollar for dollar. It's trading basically at parity, a little bit less than trading at parity, but it's good enough. This is the option I would use. And then, you set yourself up. You don't just have to buy and then later sell this option. You could actually buy this option, and this will act as your initial covering position to be able to create an income trade in the months to come. So I've been a fan of Schlumberger. I think you're noticing something. Again, don't pull the trigger till you get the signals.
Yeah, and I don't know if you've been seeing any of the ads for the new Paramount Plus show called Landman with Billy Bob Thornton, but he plays a guy in Texas who's kind of the mediator between the oil companies and the landowners and the fracking and the oil wells and this and that. And it's a really good insight into the power and the real true essence of the oil industry. I think there's 4 or 5 episodes that are really, really fabulous that have really kind of opened my eyes to how difficult it is to be an oil man in the oil business, and how we as a society really have a strong demand for it. And I think we kind of take it for granted because, there's so many gas stations around, but very interesting show. I would highly recommend everybody go check it out. Landman on
It's interesting.
Plus.
Both oil and agriculture, we're so used to just being able to go to the pump and buying a gallon of gas or buying a gallon of diesel, right? And we're so used to going to the grocery store and buying a dozen eggs or a gallon of milk, right? But when you think about where it comes from and how many people have to touch it and what it has to go through in the business deals, I mean, it's a big deal. We're so separated from where our stuff actually comes from. It almost makes us, what's that movie where everybody all of a sudden became really dumb? Idiocracy or something?
I just watched it. I love that
Oh,
movie.
oh my gosh. I've watched it like 3 or 4 times. It's been a few years, so I need to watch it again. But it's kind of like our whole society has become kind of idiocracy,
Well, I highly recommend the Landman, because I think you might find some more appreciation for the actual hard
have to
work
check that out.
that goes into pulling the oil out and getting it to the gas stations, because we are appreciative. And I never knew how difficult it was until I kind of got a firsthand look with the show. Big fan. All right, AJ. It looks like that's kind of our wrap on the speed round. We went through a handful of names. We've got employment coming out. Things are looking good heading into next week. Any final thoughts on what we should be keeping an eye on?
I'm seeing today a Lincoln hat formation. And so I'm almost it's interesting how quickly news is being digested, and then once it's in the rear view mirror, it no longer is effective. So the employment numbers this morning really impressed people, but I guess it's old news already, just a couple of hours later, because this Lincoln hat formation I'm seeing today basically means that the Bears might win out by the end of the day. We'll see what happens. We're about halfway through the day right now, but yesterday wound up being a bearish day. We'll see if we're getting ready to form a top, because we've been moving pretty at a solid, steady velocity for like the last week and a half. So it's going to be interesting to see if we break. I'm just so surprised, like I keep telling everybody, that the VIX is showing that we're so confident we're down at the lows of the VIX. You can see I've got that level at 12, which is, below that, it's extremely oversold. So the VIX shows that we're confident. The uptrend shows that we're confident. And yet, like I said in the beginning of the show, we've built this amazing skyscraper on sandstone. And so I'm going to just keep telling everybody that it's great to trade this uptrend, but have your hedges in place.
That's right. Have your hedges. And if you don't know exactly what to do, head on over to AJ's Quick Links page, grab his indicator, watch the free workshop that breaks down some of these strategies. Follow along with our weekly updates on some of the names that we cover, and show some love. Hit that like, hit that follow, hit that subscribe button. We do truly appreciate it. AJ, thank you once again for your time this morning. Thank you, everybody, for tuning in. We do appreciate it. Apologies for the delay. Thank you guys for sticking through. Otherwise, enjoy the weekend, spend some time with the family, and we'll be back next week to give you some more options insight.
Excellent. Excellent. Take care, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.